Hey, it's Danielle. Welcome to Trade Review. Today, I'm going to be going over a trade that I currently have on in Amazon. This was a directional butterfly trade that I placed after the earnings report for a variety of different reasons. First of all, we had a positive reaction to earnings. We had an overall bullish trend combined with strong fundamentals. We had a Fibonacci setup, and we had one of my favorites, which is the squeeze. So, for all these reasons, I placed a bullish butterfly on this ticker, and I'm about to take profits. As of right now, this butterfly has doubled, which means that it's at my profit target. It's a little bit shy of my technical target, but I'm still going to take it off because I've made my overall profit target on the trade and I am happy with it. So let's go ahead and look at the trade and then we'll look at the charts. All right. So let's go ahead and look at my options chain. I'm using Thinkorswim. This is currently my favorite options trading platform. And what you can see here is that Amazon is trading at $190.72 right now. Today, it's up 1.45%. And I have a butterfly on in the options market. So this is a bullish call fly. The strikes are going to be 185, 195, and then 205. So currently trading at 190.72. It's not quite to the target, which is always going to be the center strike at 195, but it's still up 102%. Why is it up 102%? Well, I've been in the trade for a week. I entered the trade on May 2nd. Today is May 9th. And when I got into the trade, it cost me $2.26 per contract. Currently, right now, the trade is going for $4.54 per contract. So that's going to be about a double on my debit. I spent just a little bit over $450 to get into the trade, and I'm currently making $456. So nice double on the money. If you look at the options chain, you can see right here where my strikes are. My first strike is at 185. Actually, when I got into this trade, Amazon was trading right around 185. So typically when I set up my bullish call flies, I set them up so that the first strike is just at or in the money. And I do that because you can buy the butterfly for really cheap. So if you're buying an at the money option, that's going to be a lot cheaper than buying an in the money option. Though I will tell you, buying an in the money option is going to give you a little bit better intrinsic value. So there's reason to do that as well. But for the most part, if I have a strong directional setup, I'm generally going to buy the first strike right around at the money. I also like to overlap that with a lot of high open interest. So we had quite a bit of volume and open interest in that strike. And then I placed my target up at 195, which I'll show you in a minute what the charts look like and why I did that. But you can also see in the options chain that there's quite a bit of volume and open interest. So that strike was sticking out to me, not only in the options chain, but on the technical chart. So it was really for both of those reasons. And then this strike up here at the 205, this is simply just an equidistant strike so that you have a defined risk trade where you have a long option here, and two short options here. If you didn't have this strike, you would have undefined risk because there's two short options in this leg. And I don't want that. I want to have defined risk. I want to know that the money that I spent is the max that I can lose. So that's how I set up the trade. Now that it's, actually the market is kind of trading higher right here. So I might just leave it on for another few minutes while I make this video. But I did want to go ahead and close it out. Now, let's go ahead and look at the charts. So looking at Amazon, Amazon made another new all-time high today. It was at one point trading at 191.70. And so that is promising, the fact that it made the new high. But, the stock hasn't been very explosive at the new high. I mean, it's made, new high after new high. I mean, you can see just all throughout this time frame, it was creeping up, making new highs, but it hasn't really been the kind of stock that makes a new high and then explodes to a new value. So anytime, you are at a point where you can see that the stock has come pretty far and pretty quickly as well. It wasn't that long ago that it was trading all the way down here at 166. That was on April 25th. Not a long time ago, right? And at this point, we're in a situation where it's been following the trend. It was down here at the 50 simple, and now it's extended all the way up above the 8 EMA. Just made the new high. We're pretty overbought as well. So there's a couple different reasons why I look at that and I say, you know what? Might as well just take profits at the new high instead of trying to wait for my full target, which was 195. Now, if you want, and I mean, you certainly could, wait for the full target. The full target for me is always going to be the 1272 extension. That's going to be the Fibonacci target, which comes in right here. Another couple dollars higher. And you can also point out that the squeeze hasn't fired. This is the squeeze down here. And there is something to be said for that. If the squeeze hasn't fired, certainly there can still be more upside in the trade. But I mean, for me at this point, the ticker has been in a squeeze since April 16th. Today is May 9th. My options trade just has barely a week on it at this point. And the worst thing that can happen with butterflies is when you've already been in it for a week and you have a double, and then suddenly, let's say Friday, Monday, Tuesday, the market pulls back or Amazon pulls back for 3 days. And not only do you lose your 100% profit, but then you start losing the debit that you paid. And then, you're 2 days away from expiration and there's no time left for it to recover. I hate it when that happens. So I try to be somewhat conservative and take a good profit when I have it. Another good reason why I wanted to just go ahead and take it off right now is because if you look at the lower time frame charts, this is a 195-minute chart. There's a squeeze right here that has already fired and lost momentum. And then you also have a 78-minute squeeze that has fired and is starting to lose momentum. And that one's at the price target at 190. The stock has been pretty sticky at 190. Not saying it can't get through it, just saying that it's been a little toppy and a little bit sticky at that price point. So for all of these reasons, I'm going to go ahead and close my trade. Another thing that you can do if you don't want to close the trade when it's not at the full profit target is you can scale. So in this example, I do have 2 contracts. I could easily just say, all right, well, let me just close one contract and then I'll let the other contract ride. That's definitely something that you can do. Typically I like to say if you do it in 3s, it's going to be a little bit better because, for example, you could take off the first third at a resistance target. In this example, the resistance target would have been really right around like 188 where that previous ceiling was. The next target would be at the new high. So we're there right now. And then the third target would be the full extension target. So you could also do it that way as well. But, tomorrow's Friday. This is actually the last trade that I have on in my account because I closed my other earnings trades today. So I'm just going to go ahead and take it because that's what I want to do. So, okay, closed it. So I closed it for 454. So that's going to be pretty solid. So today I had a bullish trade in Amazon. I had a bullish trade in App. That was an earnings trade. Took that one off. I also closed out my earnings trade in Hood. And then I have the money that I lost hedging in the QQQs. Hedging doesn't really ever seem to pay off very well. I don't know why I still do it sometimes, but I lost money on that hedge in the Qs. But overall, still pretty solid day. So if you want to be on the lookout for the other videos, I did make 2 additional videos, one about my earnings trade in App and one about my earnings trade in Hood. So be on the lookout for those. If you're interested in learning more, make sure you check out the links below and you can see where you can join me. You can also follow me on Twitter at Trader Danielle. Other than that, I love all your questions and comments. Keep them coming. I also would love some video requests. I'm working on making a bunch of new videos. So if you have any topics you would like me to cover, make sure you comment below, make a request, and I'll see what I can do. I hope you had a great trading day. Hope you have a great rest of your week, and I'll see you in the next one.